Welcome to Whyfield Podcast number 3. And today I'm with Roxanne, who's my business partner. You may remember us talking about her in podcast 1. And today's going to be all about VAT. So covering off what you need to do, how the process for registration goes, and maybe some of the things you might come across whilst registering or submitting returns. So Rox, we have a lot of VAT registered businesses.
We do, indeed. Lots in the busy VAT quarter, which is usually for the accounting year, but quite a few that do fall outside of that, depending on when they registered for VAT.
Yeah, and people usually like to get their quarters lined up, don't they, to their financial year, so that they're coterminous, which is something that
that's a good word.
that we like to throw around. So, when a small business, when should they start thinking about VAT?
I always say to clients, if they aren't VAT registered yet and I'd meet them for the first time, if their turnover starts to get around £7,000 a month, they really need to start thinking about, am I going to hit the VAT threshold? It's that kind of figure that happens and you're then reaching that VAT threshold.
Yeah, which is 85,000.
Yes.
And that's on a rolling 12-month period, isn't it? So it's not calendar year or tax year. That is a rolling 12 months.
Yeah, absolutely. So you need to be looking at it across multiple tax years on an ongoing basis.
Yeah. And that's something actually that we do for quite a lot of our clients is as they start to build up their sales and start to grow, we do a rolling VAT turnover check.
Yeah, absolutely. And we can provide that to people, to help them if they want to keep an eye on it themselves, if they're not too sure where they're at.
Yeah. And in the last podcast, we talked about the issue if you go over. So that HMRC are going to want you to trace back to tipping over that 85,000. So it is really key in terms of keeping an eye if your supplies are taxable. So I guess that's the first thing for people to work out is if what they're doing is a taxable supply, which will be applicable for most businesses.
Yeah, absolutely.
So we have things, so a taxable supply is basically the work that you're doing or the trade or the income that you're providing falls under HMRC's taxable supplies rates, which would be most things except education, some healthcare, but you can guarantee that most businesses will be making a taxable supply of some sort.
Yeah, absolutely.
And if you're not sure, we can kind of run through that, can't we, and work out if that is something.
Yeah, if you're not too sure which supply you do, whether it's 0 rated or it's exempt or it is standard rated, that's something that we can advise on. HMRC actually do have quite detailed guidance on it online. However, sometimes interpreting that is quite difficult.
Yeah, and I think that's half the challenge actually. Is VAT is probably worth saying at this point is the most complicated tax that there is, in my opinion, anyway. There are so many different layers to it. There's so many different scenarios depending. So actually it's very unique to each business.
Yeah.
How they trade, where they trade, who they're trading with. So I don't think there's a one size fits all approach really.
No, definitely not. And it's something that if you are at the point where you're VAT registered, you really need to find out what actually applies to you.
Yeah. And the impact on your business, because there'll be an impact depending on whether your customers are people, like everyday sort of public, or whether actually you're making supplies to other businesses, because that could actually have a cash flow impact to you or a pricing impact. If all of a sudden you become VAT registered and you need to start charging members of the public 20% on what you're doing for them, all of a sudden you may be 20% more expensive than your competitors.
Absolutely. And that's something that you know is really key to your pricing structure when you are thinking about actually I'm getting close to the VAT threshold is what to be able to afford to do that, you need to be knowing what that amount needs to be once you are VAT registered, whether you're going to kind of absorb that extra cost or pass that on to your customers.
Yeah, with price increases. And then understanding what you might get back as well, the other side in terms of reclaiming VAT, because we've obviously talked up until this point about the impact on your sales, but there's obviously the option to reclaim on purchases that you make that are taxable as well.
Yeah, definitely. And those will be, again, at different tax rates. So some things that you think you might pay VAT on, actually you don't, because the service that they're supplying to you is exempt or it's 0 rated, or there are other things that you buy that will have VAT on.
Yeah, or the person that's doing work for you might not be VAT registered. So the service could be, but because they're not as a business, they're not charging VAT. So you can see already actually that these layers start building up and trying to work out exactly how it impacts each individual business.
I think the key thing is really good record keeping when it comes to being VAT registered. It's having the right software, it's making sure you've sought the right advice at the right time, and that you are really taking a keen interest into the things that you're buying. Are you buying from a VAT registered supplier? Could you buy it from somebody that is, to enable you to reclaim the VAT on the things that you buy?
And you beat me to it with record keeping, because I think that's something we've touched on in the former podcasts actually, is that keeping up to date real-time information and having a really good handle on your finances. And it's the same applies for VAT, and being able to monitor it and understand what your liability might be at the end of the quarter.
Yeah, absolutely. And if you're using cloud software and you're updating it on a regular basis, actually, it's something that you can see all of the time. It's not something you have to wait to the end of the VAT quarter to look at. If your information is kept up to date, you can obviously see it in a real time situation to see exactly how much you're going to be owing or owed at the end of the VAT quarter.
And many of our businesses like to have a separate account, don't they? So they kind of put a little bit away every time that they make a sale, or at the end of each week or month, so that then when it gets to paying that VAT return, it's not quite so
not quite
painful,
so heavy
on the cash flow. So I feel like we've kind of dived right into it. So taking it back to registration. So when a business comes to us and we've identified actually that they're reaching the turnover and it's time for them to go VAT registered, and I guess it's worth noting that you can register voluntarily before you hit the turnover. That HMRC process. So we have to, or we can, or the client can register someone for VAT with HMRC online.
Yes. Yeah, it happens online. It's quite a smooth process. It happens quite quickly. We'd need to know some basic information. Most of the time for our existing clients, we already have that. Then it's a case of filling out an online form. HMRC then issue your VAT number, which gets sent to you. And at that point, when you know you're going to be VAT registered, you need to start noting to your customers that you're awaiting your VAT registration number on your invoices, so that when you've got your VAT registration number, you can reissue the invoices with the correct number on them.
Which means they can then reclaim the VAT their end.
Yeah.
And so the
absolutely
the cycle goes.
Yeah. And there's also now, once the registration goes through, you will get your VAT quarters assigned. So you pick them when you choose your thing. But sometimes if you've needed to backdate a registration because actually you didn't realise you'd gone over the threshold. So you may have an odd VAT return for the first one. So it might be a really long period. It might be a month. It could be a quarter. It would just depend on when you went over the VAT threshold and when you need to then do your first return.
Yeah, and when you chose for those quarters to be, so they try and line them up.
Yeah, absolutely. And we always try to line it up so it is coterminous, and we used that word earlier, with your year end, because it actually makes things much more seamless when it comes to submitting your quarterly returns.
Yeah. And they tie in, they make more sense then to the client, because they can see then at the end of the year how that's in terms of financial management and management reporting as well. Then the quarters line up with the VAT quarters.
Yeah,
and
absolutely.
all the reporting's in sync.
Yeah. So, for quite often we do lots of work for a client. So we'll do the bookkeeping and we'll do the quarterly VAT returns, and then we'll also do the quarterly management accounts, so we can present that information and we know that everything is completely up to date.
In line. So they've got the VAT number, it's into the software, they're raising the invoices, it gets to the end of that first return period. We've gone through, we've reviewed it, and they've kind of made the payment. That's it, they're in that cycle then, aren't they? They're in.
Yeah, absolutely. Nothing else to do. You just kind of do that each quarter until, there might be some times that you have a bit of question, you think actually this is a little bit out of the ordinary of what I do. At that point you should query it, check it, find out from HMRC if you can't find the answer, or ring your accountants, and then just carry on each quarter then getting it submitted.
And if you've already been trading for a while, there's a historic VAT reclaim, isn't there, that you can do. So if you've already been trading and you've bought things for your business that you paid VAT on before you were VAT registered, and you still own those within the business, you can go back 4 years, can't you?
Yeah, 4 years. As long as you still have those assets. So it's 4 years for assets that you still own, and 6 months for services that are still ongoing within the backdated VAT registration.
And you have to have the VAT receipt for those. And then those are all collated, and an adjustment is put onto the first return, isn't it?
Absolutely, yeah.
Which can often then result in a repayment for that first quarter.
Yes.
Because if you think standard items, even for a small business, could be computer, some furniture, the office kind of setup. So, and that's without going into businesses that have bought lots of equipment.
Yeah, definitely. Things like vans will have VAT on them. So even if you don't have a particularly heavy supply business, but you may have purchased a van or a vehicle to use, or you may have bought some tools which usually have VAT on them. And quite often we will see with a first reclaim, HMRC sometimes do what they call a compliance check, which is completely normal. Happens actually on a regular basis. It's something that lots of clients are really scared of when they see that after their first VAT
well, I think
return.
when an official letter comes through and it says HMRC compliant, they do panic, don't they? But
and it's worth noting that that's not a VAT investigation. It is just a compliance check. It's just to check that you've basically reclaimed the VAT on the correct items, and they'll ask for copies of the documents, which is why it's obviously really important that you have those.
Yeah. And I think it's just HMRC before they go handing out cash, making sure that it's correct.
Yeah, definitely.
So it's always, again, worth noting that you're not just necessarily from that day one, although that day one is that line in the sand for your business moving forward, there is potential for some reclaim going back. So we always, if a business is coming up to 4 years old and hasn't yet made that transition into VAT, it's something that we think about, isn't it? Because once they get past that 4-year stage from all those setup costs, that VAT then is lost.
Yeah, it definitely is.
And VAT changed recently. Well, it started in 2017, so not that recent.
It feels like it was recently.
Yeah. Between 2017 and 2022, I think, was the last inception of making tax digital. So I think we touched on it slightly before, and I know we're going to touch on it in other podcasts around that real-time information getting to HMRC. So it's now, there's no paper returns, or in very, very rare circumstances now, isn't it?
And it's really, really rare circumstances. Actually, HMRC will not accept paper returns unless there's an extreme reason why you have to complete one. So it has to be software that submits it over.
Yeah. And I think, I haven't looked in a while, but there's over 150 MTD compliant softwares that HMRC approve. So we talk a lot in our practice about Xero and QuickBooks, amongst others, but there are actually hundreds out there that you can choose from.
Yeah, there definitely are. And actually some bank accounts have free software that they offer, and those, I believe, can also submit VAT returns. So it isn't just that you have to then go out and buy another software if you're already using something that is compatible. But it's worth checking if you are starting to use software that it is at some point going to work for you long term.
Yeah, and that you're not going to have to then change when you want to go back registered, that it can already do that job.
Yeah, absolutely.
Job for you. Brilliant. And then I think other things to probably touch on, and I say touch on because we could go on all day about this, is the different types of VAT schemes. So when you're registering, so you've got the flat rate scheme, for example. So that's a scheme where you charge your client 20% VAT, but you pay a smaller amount of that sales VAT over, don't you?
Yeah, to HMRC. That's usually discounted for your first year by 1%. So it's done based on your service to clients.
Like the sector that you're in.
Yeah, the sector that you work in. So, and they're completely different. So I'd bore you all if I listed them off the top of your head. But
they can be found online, but you don't reclaim any VAT then on your purchases, do you? So it makes the VAT return, sort of the management of it or the paperwork of it, a bit less, because you're only looking obviously at your sales and applying that. So you get to keep that little sort of benefit to yourself. So if you're a business that isn't buying lots of VAT supplies in, for example, you're maybe a sole trader service and it's your time that you're selling, the flat rate scheme might be something that would really work for you.
Yeah, definitely. If you don't have any overheads, you work from, say, a home office and you only literally have just yourself and maybe a mobile phone that you use if you're some kind of consultant or something, then actually the flat rate scheme would probably work quite well,
And there are thresholds as well, aren't there, in terms of if you are on that scheme and your turnover exceeds a certain amount, that you have to review that. So with all of these things, it's that constant review and not just, oh, well, I've been like that since day one. So it's always checking.
Yeah, it's worth checking.
Another one, and one that actually I spoke to a potential client about this morning, actually, is the cash basis. So the standard, obviously, VAT scheme is that you go on the date of your invoices. So that's the tax point that they have. But the cash basis is when the physical invoice is paid, isn't it?
Yeah, and it works both sides. So it's when you receive your money from your customers, but then you also pay your money over to your suppliers for things that you're buying. So it means that actually your cash flow is slightly helped because you're not paying VAT over to HMRC on your sales for invoices you've not yet been paid for.
Yeah, and that was actually the scenario that I was talking about to this client this morning, is they're invoicing up front for large projects that are then being delivered over a period of months, if not years.
Yeah.
And therefore, if they're invoicing up front for all of that work and paying VAT on that, then they've got to fund themselves cash.
They've lost the 20% over to HMRC without even receiving a penny yet.
Yeah, so. Exactly. So we touched on the cash account scheme and actually how that might work for them. So as well as ensuring if your supplies are taxable, you've got the right software, it's making sure that you've got the right scheme as well for your business.
Yeah, definitely.
And there are some other schemes that are a little bit more niche, retail schemes, for example. So people who are predominantly buying and selling, so your sort of corner shops and your news agents and those sorts of things. And I guess the other sector that VAT is really quite dramatically different is construction, and one that we see quite a lot, isn't it?
Yeah, absolutely. And that's something that actually is quite new. The domestic reverse charge that HMRC brought out, and I think that might have been 2022 or so.
Yeah.
And they've basically changed the rules for people in the construction industry about when they charge VAT.
Yeah.
And they're quite complex, as
very complex.
Always. And there are certain, they don't apply to everybody that works in the construction industry. It depends basically on the service that you're providing. So that one is a really, really good one to really try and get your head around and understand if you are in that industry.
Yeah, because it's not only if the service you're providing is taxable, so you have to work out if you're working on a new build residential or a commercial property or a renovation. So for the construction, whether it's what type of construction you're working on, then the type of work you're doing. So whether it's actually to the fundamental building of that project or it's something maybe secondary to the building project.
Yeah.
And then it's who are you doing the work for? Are you working on behalf of another contractor or are you working for the end client? So actually in that instance, a business could be raising different rates of VAT on every single invoice they raise. Yeah,
definitely. It's actually worth noting HMRC do have a bit of a like a flow chart that you can follow. It's quite a good one, and that will really help you to understand what it is that you're doing and who you are, who you're doing it for, which is a really big help for people.
Yeah, and I think that is probably where a lot of our VAT questions come in, is this new reverse charge. It can get...
It's an absolute minefield for anybody.
And even for us, when we get asked the question, I think we have to sort of take a minute and go and make sure we're asking all of the right questions so that we can give that right advice over.
Yeah, definitely.
Anything else you can think of for VAT? I guess we've touched on the registration process, we've touched on the quarters, the software, the different types of sectors. Voluntarily registering, for example, why would a business might want to register ahead of reaching that threshold?
I think most people, if, for example, you sell business to business, it's something that actually most people quite often feel like they should be VAT registered. And actually, when you first start having a business, and if you're not VAT registered, people ask you for a VAT invoice, you're a bit like, oh, I haven't got one of those. Should I have one of those?
Yeah.
Which actually, but... And they want that because they can then obviously reclaim the VAT on the service that you're providing to them.
And I guess it almost gives a public announcement of where your turnover level is as well. So you could, if you're B2B and all the businesses that you're going to be working for are going to be VAT registered businesses, I mean, it's hard to make that assumption, but you think that they will be, then going VAT registered ahead of the turnover then kind of puts you in a bit of a, you could be turning over anything.
Yeah, exactly.
A bit unknown, keeping that information a bit more private.
Yeah.
Okay.
And it could be that you actually, that you're going to be buying lots of equipment and you're not ready yet. So you might be working, for example, in the construction industry and you might want to buy a digger. and you're going to have a load of VAT to be able to reclaim on that digger. And therefore, actually, you'll be in a repayment position to start with, actually, which will help then your cash flow to be able to pay for it. And then the services you provide, could be 0 rated or they could be exempt.
So it's just that forward looking, isn't it? You're not just looking at what we've done so far. It's what do we think we're going to be doing in the instance. And I want to kind of touch back very quickly on what you just said about if you're going to buy like a large piece of plant. Quite often if you buy those using a HP, a hire purchase agreement model, the deposit for those is the VAT.
Yeah.
So quite often that finance arrangement, the broker or the finance company will ask for the VAT as a deposit. And if you're not VAT registered, again, that is an amount of cash you've got to pay over that you can't reclaim.
Yeah, absolutely. And so obviously, you have to pay that up front anyway. But the point then of being the VAT registered is that within your first VAT quarter, which hopefully wouldn't be within too long, you'd then get that back from HMRC again.
Yeah. So you might just only need to cash flow that deposit for a month or so before it's back in your business.
Yeah, definitely.
And touching back on finance agreements and things, I think it's something we get asked quite a lot because people do nowadays. They're using brokers to be able to finance large assets within their business. There is VAT that can be reclaimed on then, isn't there? So operating leases is on the month by month that it's paid. HP might be up front. So again, really worth checking the documentation, ensuring that you're claiming that back at the right time.
Yeah, absolutely. And they can be called all kinds of different things now. They're not just standard HP or lease anymore. There are so many varieties out there. So it's really important to get the paperwork so you can actually look at what implications for VAT there are.
Yeah. And in terms of when you've submitted your VAT return, just going back to kind of covering off that first, the logistics really of it. If you are in a repayment position, how long till that comes back to you usually?
So it depends on HMRC usually, and if they are going to do a compliance check or not on your VAT return. But if it's actually something that you are regularly having repayments, usually within 30 days, they're normally pretty quick. Sometimes if it's your first couple, they might take a little bit longer, but actually once you're in that kind of swing of it, within 30 days.
And paying VAT, just remind kind of people here, the listeners, you at the end of the VAT quarter, you've got 1 month and 7 days to make the payment, submit the return
and make the payment, unless you pay by direct debit, and then you get an extra 5 days.
Fantastic. Extra cash flow time.
Although then you're not in control of when that leaves.
So it's as soon as you submit it, it's pulled, isn't it then? So if you're super organised and you submit your VAT return in the first week following the quarter, then that money's going to come out a few days later. So you're not in control, as you say, of when that's going to leave your bank. But yeah, and it's probably worth saying as well that HMRC VAT penalties are quite strict, and they've had a new regime, haven't they, that came in only in the last few months. I
think it was beginning of 2023 I think the new
Time
regime came in, which they are now operating a point system. So if you file a VAT return late, you're going to get a point, and once you get a certain number of points, then the fines start,
and the actual financial penalties and interest on the amounts that you owe. But they have given slightly more extension as well, haven't they, in terms of flexibility. If you need some time to pay, I think you can quite easily get another couple of weeks. So if you are working where maybe you've only got a couple of invoices coming in, so you're sort of few and far between in terms of your revenue, there's a little bit more flexibility, but it's talking to HMRC, isn't it? It's getting ahead of it, not just ignoring it and hoping for the best.
Yeah, that's the best thing to do, is actually knowing that you're going to be in that position and going, okay, right, I need to speak to them, because actually if you communicate with them, they actually, they're on board to help. They don't want to see your business fail. They don't want to see you struggle for money. They actually want to support you. But you just have to be honest and talk to them.
And like with all taxes, we can be agents for our clients, so that then we are dealing with those conversations with HMRC ourselves.
Yeah, absolutely. Quite often with payment plans, we can't set those up, but we can talk to HMRC, agree terms, and then we'll say that the directors or owners of the business will need to call up and say, you've spoken to my agent, all the notes should be on the file. I agree to this. Can you put it through?
These are my details. Perfect. Okay, so I think that wraps up our VAT sort of touching on, as we said, it is the most complex tax that there is in our opinion. So loads and loads of layers to it, and definitely worth one thinking about in sort of quite a lot of depth before you make the decision, or just understanding what it means for your business moving forward. Thank you, Rox, for joining me on this one. Look forward to speaking to you soon.